Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at technical charts and then try to understand what exactly happened in the market during the previous week. And we also plan for a better trading week that's starting from tomorrow, March 24th, Monday 2025. So let's deep dive into the charts first. Here we have the Nifty 50 charts, weekly and the daily on the right side. So left side weekly candle shows a very wide range reversal exactly at the bottom of that trend line channel, and daily charts you see an attempt to break out from that parallel channel. And Banknifty with a narrowing wedge, bottom of that a big bounce up is clean very clearly, and on the daily charts there is an attempt to break out with the W pattern. Double bottom breakout attempt is what is seen on the daily charts of the Banknifty. That's exactly what's the picture. So it was a big reversal, not a normal reversal. 4.28%. That's nearly 1,000 points. 959 points up. So market clearly reversed strongly and closed positive 4.28%, and the correction, the last correction from the top of all-time high is 16.4%. But remember, this is after a rally of 72% from 2022. So what did the banking index do? It also reversed strongly and made 5.3. That's 2,547 points in just 5 trading days, and it has moved about the 220, 50, 100, all the exponential moving averages. And the correction that has happened is only 12.45 in the previous week. That's a kind of big moves, and that's evident from this candlesticks. Look at this. It's a wide, very wide range bullish candle. We are talking about 2,000 point candle, single week candlestick, 2,500 point candlestick, and 1,000 point candlestick on the Nifty. That is what we are seeing. So there is, it's almost fully engulfing the previous several days of candles. So almost 4 5 days of candles are engulfed completely. In the case of Banknifty, 6 days of candles fully engulfed in one single week, right? 5 weeks of candle, sorry, I said 5 days. It's 4 to 5 weeks of candle completely engulfed in a single week move. So that's a kind of huge reversal that has happened last week. And daily candlesticks clearly shows the last 5 days was gap up, gap up, gap up. So 3-4 days of continuous gap up that can be seen right from Monday, Tuesday, Wednesday, Thursday. That's the kind of move. Absolute bullish reversal move is what. So the reversal is almost 6.5%, 6 to 6.5% of reversal from the previous swing lows is what has happened during the last couple of weeks, right? 3-4 weeks is what we are trying to reverse, find the bottom and reverse. So it looks like the market is found its bottom for the time being, but at the same time you can see that it's a crucial W pattern breakout zone on Banknifty, and also a crucial resistance. We'll come to see that later. But before that, let's see what the Bollinger Bands are talking about. The Bollinger Bands on the daily, he is showing an expansion now on the upside on the Nifty, an expansion on the upside, breaking out, walking on the bands is what probably that we may be seeing. So an expansion on the upside clearly means that there is potential upside moves that can be expected in the coming days. That's what Bollinger Bands are talking about. Now if you look at the candlesticks that we saw today, it's all wide range bullish absolutely on both indices. So bullishness is evident. So it's a 6 to 6.5% of corrections, and market is not corrections, pullback that has happened after a 12.5 to 16% of correction that has happened in Banknifty and Nifty respectively. 6.5 to 6% of correct retracement or pullback has happened, and then still the lower high is not reached. Keep that in mind. Such a major zone of breakout from here could potentially take out the lower high pattern price action, and then that's what things are going to be very decisive. So let's get into and see what the momentum and the trend indicators are talking about the indices. So basically we are doing the multi-time frame analysis of the weekly and the daily. Momentum indicators to use is RSI 60/40, and then trend indicators at 1.5 EDX that is used to understand that trend. So clearly it's a sideways move, sideways and rising momentum that can clearly see on the other side and both indices on the weekly time frames, daily time frames. It's called the bull zones. So absolute bullish momentum, but medium term it is sideways and rising, and short term absolute bullish breakout. With respect to the moment, with respect to the trend, it has turned bullish on the short term, but medium term it is yet to happen, just like the momentum, right? It takes the last week for the next week to decide whether the medium term course will also happen, because it's only 1 week where this gigantic move has happened. So the trend, the lag indicators on the medium term, you just have to wait for the next week also to understand whether the trend has turned bullish and the momentum has turned bullish or not on the medium term. So otherwise, absolute brilliant move is what you see. Now on the right side, what we are seeing is the India week, so the fear and the greed indicator or volatility indicator, which has dropped. The market is breaking out and volatility is falling down, 5% fall, that's 12.51, absolutely in favor of the bulls. With the fact that the fear and the greed has dropped despite the Trump tariffs and all the news around, market is showing no fear as of now. With this big move last week, we don't know whether this is going to stop here and then reverse with respect to the volatility, but as of now, the volatility is cooled of 5% further and gone below the 12.6. That's what volatility is talking about. That's what trend and the momentum is talking about. Let's move ahead and try to understand the open interest. Absolute bullishness, short covering is what futures open interest is showing. And for the monthly expiry that's coming on the Nifty and the Banknifty on March 27, Thursday, we have put call ratios of the options open interest showing bullishness as well, 1.1, and Banknifty is crazy about 1.3. That's no doubt bullish. So open interest absolutely bullish. And open interest charts is what the levels is what is indicating in this grid at the bottom, and you can find the levels of resistance and support using that. And what you see is 23,000 and 24,000 is the range where the highest put and the call writing is seen, where the highest support and resistance can be understood as that being the point. And the second highest is 23,200 and 24,100 where the highest put and call writing is seen. And for the Bank Nifty, 50,000 and 52,000, not very big range, very decent narrow range, and that's where the put and call writing is seen. So supports can be found at the 50,000 and resistance would be at the 52,000 levels, and 49,500 and 51,000 where the highest, second highest support and resistance can be seen. And that's about it. That gives a small view of where resistance support can be expected as per the open interest 4 more days for the month expiry. But that's what the put and the call writers are showing us as of now. This could change, but it can be as close to that. Remember, it's a week monthly expiry. It's going to be more volatile, and it's the 6th month where after 5 months of red monthly candles, this is the month and candle that's getting formed, and the expectation is that it could continue to be, it would reverse and turn out to be green, that's for sure, but the volatility would be there, of course. Now, another way of finding the support and resistances is to understand the charts based on the different technical indicators like exponential moving average, Fibonacci, previous ring lows, previous highs, resistance zones, gaps, and all this. So the levels that's indicated here for the Nifty and the Bank Nifty are based on that. For example, the Nifty, the first nearest resistance will be the confluence of the 100 and 200 exponential moving average zones. That comes in very close to the 23,500 zones, 23,360 and 23,439. That's where the first resistance will be. If that is cleared, it goes to 23,400, where it will be a major swing high, and a breach of that would also mean if Fibonacci 50 retracement resistance, that could also be taken out. And if that clears that, 24,000 holding number, and 24,334 is for the Fibonacci 38, and so it's 24,227 also is going to be a previous year high, and that's also going to be a very major resistance. And after that, it can head towards 24,880, and that is where the real price action changes to higher high, higher low. Until then it's still lower high. Until then it is still struggling to reverse, is what we would say. So anything would happen. Reversals could happen to the downside at any point in time if it is not succeeding, and the path upside may not be straight. It may involve some kind of retracements, small retracements, and before it heads and breaks out. All this combinations of things could happen. Similar to the Banknifty, you see that it's in the panel channel, reversal is happening, and it's a W pattern, double bottom, whatever we call it. It's a neckline of that, and first resistance will be that 50,650, and if that breaks out, it goes to 50,000. 51,000 rounding number, and 51,176 resistance is there, and that major resistance is going to be at 52,000 surrounding number, previous swing high, and also a window gap is also there. So that's also the top of the trend line channel. 52,000 is going to be major resistance as indicated in the alternate analysis as well, so keep an eye on that. Downside, the supports would come in at first at the Fibonacci 61, the 50 exponential moving average, confluence at the 49,000. So the first support could be the 50,000 rounding number, then the 20 to the 200 and 100 exponential moving averages that comes in at 49,950 zones, then 49,897, 49,650. These are all previous resistance that's overcome now by the Banknifty, and now that could act as a support on the downside journey. And 49,000 has got a cap, and that's going to be a really good support. And then previous zone lows, it can go as low as 47,690. So levels of detail here, we can have a look. And what is DMA is exponential moving average daily, and PSH is previous swing high, Fib is Fibonacci, RN is rounding number, and that's how it is. Gap is window gap. So this is a technical analysis way of finding levels, and you have to correlate and find a conclusion of where bets can be placed on support and resistances based on this, right? Technical analysis as well as operator analysis to understand the support resistance is what you're saying. Let's move ahead and try to understand what the different major sectorial indices are talking about. The 7 of them. The IT sector, as basically, if you see almost all, it's all of the major sectorial indices have bounced up. IT is bounced slightly, 1.65. Metal huge 5% move, auto sector 5.9% move, pharma 6% move, FMCG slightly 2.1%, reality 8%. So the sectors that have fallen down drastically has bounced up equally sharply on the upside. Reality 8% up. So things have climbed back to the sideways, you can say more, but still it's not time for placing the bets on the long side. But a huge upward reversal across the sector. It's not one of those sectors that's more than market. See, across the sector upward that we have seen is very visible. Look at this charts for the same. IT sector did stop, or some arrest of the downfall has happened, but it's still in the bearish momentum. Keep that in mind. With respect to the medium-term RSI momentum we're talking about, the metal indicator had already found some bottom at the bottom of the channel, and then it's bouncing up, and it's confirmed that sideways rising up. No problems there. Auto index also was consolidated for the last 3-4 weeks, and that now it seems to be showing intention to move up. And the pharma index also was trying to find some bottom of the channel, and then both of them have climbed in the sideways momentum and rising up. No problems there as well. FMCG also was at the bottom and then trying to move up, and then it needs some more time to climb back in the sideways momentum. So some trouble is here in the IT and the FMCG, but otherwise reality has managed to climb back up from the bottom with the Friday's move. So overall, there is small trouble that is still there with respect to the IT, the FMCG, and that's other sectors are bounced up and managed to climb in the sideways substantially well. Now, index heavyweight stocks, it's heavyweight stocks which contribute maximum to the indices. HDFC Bank was holding strongly, and last week it did extremely well. But the momentum is still sideways. Keep that in mind. It's a parallel channel, so it's a very solid bullish candle. Reliance also solid bullish candle, sideways and rising up. ICICI Bank, big move, and it has climbed all of a sudden after hovering for several weeks on the sideways. It has made very bullish move to very close to the all-time high once again, just like a splash of 1 or 2 weeks. So that is a good move. The first stock to climb back to the bullish stock, first heavyweight stocks I would need. After Kodak Bank made that big breakout, like you see there from the consolidation that is going on since 2021. That's like 4 years of consolidation. In between there was a 2022 did show a breakout. Seems like it's going towards that to the all-time high. Kodak Bank solid breakout. See there, confirmation can be coming in only next week, but Kodak Bank is doing good. HDFC Bank is done extremely well. and others have recovered. IT is still having some trouble. That is, as you can see, the Nifty and the DCS both have the momentum at the zones, but last week's move was good enough. FMCG also, as I said, along with the IT, is having some trouble, but that is probably the only stock that is showing red, some kind of red, and ITC is showing some red. That's only heavyweight stocks that's showing red has gone down, but it's managed to stay in the sideways momentum, you can say. So overall, the banks have done good, the lands has done good, IT is struggling, and FMC also having some trouble, but yeah, overall markets seems to have climbed back to the sideways, and some of them are going towards the bull zones, especially the banks like Kodak and ICICI Bank. So that's good news, and let's move it and see what the broader market indices like mid cap and small cap is showing. So what a beautiful reversal, solid candle that you've seen, and it just suddenly climbed back to the sideways zone. You have to see whether it sustains or not. But it was trying to find that bottom the last 2 weeks, and the previous week it did confirm that it'll make good reversal, and we can hope that this could move towards the top of the trend line channel. So the market has showing good reversal signs as well. It's very positive. Now that we have seen the different sectoral indices, heavyweight stocks and the bottom markets, let's move ahead and try to see how the institutional participation happened. FIs have been buyers for the first time after a very long time, probably a couple of months. It's never coming with a week where we had such good moves, but still only 6,000 crores of buying, and domestic institutions have made profit booking when the FIs are buying last week for 336 crores of selling has happened. Yes, that is also buying. Net value is buying only. DIs did sell for the last 2 days, but they continued to buy the previous days as well. So they also ended up buyers, but they did book profits on Friday and Saturday. So net to net, both the FIs and DIs are buying, which is exactly what we need. And FIs are back is very positive. Derivatives on the long side of FIs also moved off net longs. So that is what institutional participation. Some green seal, and that's why FIs are back. Let's now try to understand the currencies, the global markets like gold and crude oil, and try to understand what the US markets are doing. So dollar index has been dipping, it's crashed last week, and then we are seeing that it's a slight 0.40% up, but the USD INR currency pair has crashed down 1.1%. That's very good news. After a very long time, it has come below the 86 price point. Still is weak, but it's a big gain in the rupee that has happened. Not sure the fundamental reasons for that. It will be RBI interventions or things like that. But the charts are showing that the rupee is strengthened. Rupee is at 85.97. Right, still weak, but it has strengthened. It's a very good thing with respect to emerging market like ours. The crude oil also has not moved much. It has been on the downfall. It is maintaining that level of 67, 68. That notes 1% up, but that's okay. Remember, we had an 18.5% of fall from the top of the trend line channel. That has happened, and crude oil is within control, but a small spike up this week. Gold is making all-time high, and this week we had another all-time high, about $3,000 for the gold, and it's up 1.3% this week as well, and it's bullish, and it's 88% of breakout all-time high levels that you see in the gold. The gold is where the money is flowing from the equity market. If at all money is being pulled out from equity across the world, from the equity markets, money is flowing to safer havens. Hedging instruments, good, the gold is rising up, but so that's about the crude oil and the gold. Crude oil and gold looks fine. What about the US markets? US markets are showing some attempt to recover after a big crash that happened in the last couple of 3-4 weeks. You see the Dow Jones, it has been falling 4-5 weeks, and now looks like it's right up. It is an inside bar indicating some consolidation can be expected, and it has not fallen below the bear zones and taken a bend there. Probably it could indicate that it can recover and go back from here. Similarly, the Nasdaq has got a rise ascending wedge, and it has found a bottom at that point, which indicates probably there is some move towards the upside. The narrowing wedge can happen now. Momentum is still sideways, it's taking a bend near the RSI 40. S&P 500 also has taken a bend at sideways. So as sideways and rising up is what US market is all about, and overall it is closed flattish green 1.2%, 0.3%, 0.5% respectively on Dow Jones, Nasdaq, and S&P 500. So rising sideways, US markets is with a green close as positive, so that's although it's flat as green. Crude oil falling is good. So overall, positive cues as of now, you can say, with respect to crude oil, US markets, and the rupee gain, US INR gain. So positive global cues, and let's now move ahead and try to understand what are the two actionables for the next week's. Remember, these are all for education purpose and not trade recommendation at all. You can see here Manipur Finance Limited is having a cup and handle breakout, absolute clear breakout with big volumes, momentum above RSI 60 and bullish trend indicators on the ADX. Reasons 1:2 RiskReward is cool. We can get that 1:2 RiskReward. It's a classic example of a cup and handle breakout. Manipur Finance. Right side you have the Airtel, which is having a flag breakout. I have touched stop loss because it could fizzle out. Because momentum is still not settled above the RSI 60, but volumes are good, momentum is good, bullish, trend is bullish, and pattern is price action. Pattern is a flat breakout. So everything is in favor of the bulls, and it could easily give 1:2 RiskReward. But the Airtel long side, Manipur Finance long side. That's technical charts, sitting and study, and take a better as per your risk appetite and your intent and your understanding of your study of technical charts. Right? Two stock pick selections for the next day. Now, fellow strategy on the Nifty options is having a Batman strategy which is unhedged on both sides, giving a range of 22,700 and 22,900. The moment it reaches either side of this, get out. This is basically selling double and OTMs and selling far OTMs and buying far OTMs. Taking inside hedges and selling inside hedges of OTMs on both sides, P and C, and taking outside. Selling outside double of that what is taken as hedge. So if you want, you can protect your with one more hedge on the other side, another buying hedge on the other side, but that will reduce the premium. So here the RiskReward is okay, range is good, profit is very good. And that's what the Batman strategy is all about, right? Weekly. So it gives a very good range. That's the thing. Profit may remain not much, but we will not lose money at least, right? That's the weekly Nifty option strategy. It's not weekly, although we are taking the levels now, so it's equivalent to weekly, but the expiry is going to be monthly. Let's try to wrap it up. The market made beautiful, strong reversal and total reversal in the last few weeks. From the bottom near 22K is 6.5%. The correction from the top all-time high is 16.5%, and in this week as well it is close positive with the gain in the momentum and the trend. FIs have turned into buying. It's from selling after a long time, but market has stopped at a very crucial zone of the Banknifty, especially it's a W pattern neckline, and Nifty also it is a zone of resistance. So fingers crossed. Let's try to bucket the different factors in favor of the bulls and the bear. So as you see, the shift from the bullishness to from the bearishness is clearly seen. All the factors have turned into the other bucket now. One of those, OP has gained, right? FI has returned bias. US market is close green. As futures OI and operators options put call ratio is bullish. India VIX is cooled off. Wide range candlesticks. Crude oil cool off. Means crude oil is not rising up much. Major sectors are climbing sideways, gain momentum. Major heavyweight stocks are also showing bullishness. Solid candles, the ICC Bank and Kodak Bank, HDFC Bank, etc. Orange bands are showing expansion on the upside. Prices closed above the 20 and the expansion moving average. The case of Bank especially. And bottom market is also showing green. So what is in favor of the bears is that gold is making new highs. Low purchase is 6 there. Market is at resistance, and there is medium term bearish trend still there in the Nifty. It is still not closed over. Momentum also has not climbed into the bull zones in the case of Nifty. So medium term, things one more week. The Nifty has not climbed above the 200 exponential moving average yet. Keep all these things in mind, right? So things at the resistance zone, things are not 100% guaranteed. A confirmation is coming next week. Keep that in mind. Use the added sprint bar, all this is that. Or active stop losses. Don't take blind bullish bets. Now, technically, charts show a reversal after a decent correction of 16.5, right? But it's at a very resistance zone, as I said. Global markets are okay, but you cannot roll out a possibility of a pullback from here. Because it's a crucial resistance only. It's possible. Or a breakout from here is also can happen, right? We already see the levels where it gives a confirmation of the price action. Keep that in mind. Now, tariff fear and trade war fear and all this still there. Keep that in mind anytime. The global gives are not absolutely that great. So, and it's a monthly expiry that's coming. It may be green, it may be ending green for sure because this way it's such a bullish move in less. But it's affected after 5 months, right? But can be very volatile. Keep that in mind. There's a possibility that some consolidation can happen at this point before it gets enough strength to break out and make the price action to higher low. It may take some time, but definitely it is at resistance and good reversals happen for sure. And the mild bullish bias is what my market is for the next week. So always keep in mind technical charts can go for a toss if there is black sign events that comes in due to pandemics, wars and all that. Technical indicators are only study of probabilities. Instead of blindly taking a bet, you take a bet based on the places where there is likelihood of resistance as per the psychology. So always hedge your positions, hedge your portfolio, and without hedging you can lose your money, and management of risk is the only thing that you have learned to trade. Our hedging strategies are there explained which can make you rental income as well, using options. Check out the playlist for that. Right? That's all I have for the week. I'm also active on X where I post similar day-to-day technical analysis and all that. You can refer to that as well if you like. Subscribe, like, and give us your comments and share it to others so that we get some subscribers. Thanks for watching. Happy trading, happy learning, happy investing. Bye-bye.